Once a money printer, ESPN future has never been more uncertain as people ditch cable for streaming. Now, speaking of streaming, Disney and other entrants have yet to make the economics work. Disney said Disney Plus will not make any money until next year at the earliest. And regarding the marvelous movies coming out of the Disney studios, well, they rode Marvel and Star Wars films to remarkable box office heights. However, I think people might be getting bored of watching superheroes run up and down New York City blocks. Now, recently, Disney reported their earnings this past week, and the results were mixed. Yet, this article comes from Yahoo Finance by way of Zacks. 8 months into long-term CEO Bob Iger's return, there are signs that Disney is turning around in a bid to get back to its glory days and stable growth. Disney posted mixed quarterly results with sales of $22.33 billion. That slightly missed estimates, but earnings of $1.03 per share beat Q3 estimates. Year over year, Q3 sales were up 4%, while earnings decreased 5% from the prior year quarter. Still, the earnings beat was reassuring, attributed to Disney's parks and experience segments, while the company aims to strengthen its media assets. Bob Iger stated Disney's quarter results were reflective of the company's unprecedented transformation to restructure, improve efficiencies, and restore creativity to the center of its business. Iger elaborated that this is creating a more cost-effective, coordinated, and streamlined approach to Disney's operation and has put the company on track to exceed its initial goal of $5.5 billion in savings, while improving direct-to-consumer operating income by roughly $1 billion. Regarding streaming subscribers in Disney's direct-to-consumer segment, Disney Plus had 146 million users during Q3, which was down 7% from a year ago and missed estimates by 5%. Disney stated it would raise prices on ad-free streaming plans and crack down on passwords sharing similar to Netflix. This seemed to appease investors, and Disney is still ahead of other rivals such as Paramount and Warner Brothers in regards to subscribers. Other favorable news. This was interesting this past week. Disney announced it would sell exclusive rights to its ESPN Bet trademark to Penn Entertainment for $1.5 billion. Penn will pay the sum out in installments over the next 10 years. So Bob Iger is starting to think outside the box, and the whole betting thing, legalization by the states, is opening up new revenue stream for many different companies. With Bob Iger at the helm of Disney again, the company appears to be making the right steps to get back to prominence. Overall, the company's Q3 report was favorable, and while there may be better buying opportunities ahead, holding Disney shares could still be rewarding. Now, personally, I think there's still more downside risk. Although the last 3 months, including the current month, you have these doji candles on the monthly chart, which signify indecisions. Essentially just the buyers and sellers duking it out for position to see who will reign supreme. Now, if I squeeze the chart up, you can see where price fell from. These were the glory days of 2021. These were the pandemic lows. And when everyone started staying home, Disney, along with Netflix and other streaming services, saw a rise in their subscriptions. However, when the economy opened up, these platforms lost subscribers, which meant they lost revenue. And you can see how price steadily declined. Now, the selling has declined somewhat. This is one big trading range going back to last year. However, According to the monthly chart, the liquidity is about $10 lower, in that about $15 lower. Now, why is this monthly buyers? It's not the best structure, but what you can see, you had a rally in price, you had a red candle, and then a rally out. Really, the best level to get long is this level below 70. That's where we have not only weekly buyers, but we also have daily buyers. Very powerful level, because both of these weekly and buyers levels, daily levels, are within a monthly buyers level. So let's go down to the weekly. And what you can see is that, price is still making higher highs and higher lows. A bounce back to 95 is warranted, but then I'm anticipating price continue to move down. If and when price moves down, then I'm expecting liquidity to come in, volume to come in, and the buyers to bid up price. Because we're on a weekly chart, let's look at this level here. Again, not the greatest price structure, but you have a rally in price, couple of basing candles, and then a rally out. Price tried to come back, but could not, as there were huge amount of unfilled buy orders that bid up price. Now let's just scroll down to the daily chart, just to see what that daily buyers level looks like. This is a very nice level. Price structure wise, you have a rally in price, a couple of basic candles, and a rally out, taking out all the pivot highs to the left. Price came back to that level, depending on where you actually draw your zone, and then took off. So there are buyers between say $65 and $70. Alright, let's see if there's any levels of interest on top of price. It's a lot of trading, so I don't really see any levels where there were imbalance between sellers and buyers. You have to scroll all the way up. This is the last earnings. You had a gap down on high volume. Now this level is roughly $8 wide, just taking advantage of the two selling levels, one at 136 and one about 132. Let me scroll back out to the weekly chart. Anything in here is just very choppy. You might get some swings on a hourly chart or 4-hour chart, but if you want to swing trade, best levels to keep an eye on, it's going to be down at the $34 level and the 135 level. Again, the quarter was mixed. I do think that there is still downside risk. I do think that liquidity is further down, maybe $15 lower. I do think that we're going to get a bounce if and when price gets down sub 80. Thanks for watching. Subscribe, please. Like the video.